What if I could tell you you could save money with a higher interest rate? Wait, what? I can save money with a higher interest rate? That's a trick. No, it's not. It's perspective. That's what I want to talk about today. First-time home buyers today are feeling jilted. Like they couldn't get into the market when the interest rates were lower. And now that they can finally get in and compete because there's less demand and more supply, the interest rates are higher. Wait a minute. There's more supply and less demand because the interest rates are higher. It has opened a door of opportunity. And I understand that you're upset because you couldn't get the lower interest rate, but I want to share a little perspective and then the opportunity. So here's the perspective. Say I could get a home in March for 4.25. Well, in order to get that home in March, I had to bid over asking. I couldn't get it at list. I would have to offer $50,000, $75,000, $100,000 over asking. So let's just say I did that and I wanted to purchase a home and maybe my loan amount would have been $600, but now it's $675 and I got 4.25. The principal and interest payment on that would have been $34.70. But today I don't have to bid $75,000 over asking because that home has now been on the market for more than 4 hours. In fact, it's been on the market for more than a weekend. And sellers are looking for buyers and they're looking to sell at list or even give you a 2-1 buy down or a seller credit or offer a reduced price. Now we have opportunity. So say a similar home now, it would just be a $600,000 loan amount, not $675,000, but the interest rates went up. I mean, they went up to 6.25, 6.5. Now they've actually come down. Now interest rates are 5.625. That 600 at 5.625 is actually 34.54. It's lower than the home would have been in March. Even if you got it at 6.25, it would be about $150 higher. But if you saved the $75,000, it would take you over 30 years to make that back by keeping that $75,000 in your pocket or paying that down a little bit extra. I mean, it's about perspective. I get it, the interest rates are higher, but if you can get into that home using some of the examples that I just mentioned of the seller credits and the 2-1 buy downs and even get an even lower interest rate, it makes a big difference. The higher interest rate can actually save you money because you're no longer having to bid over asking. So you need to be talking to your lender, walking through the numbers. What does it look like today? Not getting caught up in the rate, but looking at the opportunity. Because remember, you're marrying the house, you're dating the rate. It's kind of cheeky, but I kind of like it, right? You're marrying the house, you're dating the rate. You can refinance because when the economy slows down enough and the Fed has controlled inflation, we are going to see that slowdown is going to result in lower interest rates. And those lower interest rates are going to give you a refinance opportunity. And we're also doing refinance certificates, giving you $1,000 off of your closing costs at that time. Because we know this period, this loan is probably not going to last very long. You're going to have the opportunity to even reduce that payment further, knowing you didn't have to pay over for the house. Nicole Rueth with the Rueth team, let's sit down, let's talk your numbers and get you into a home today.